we've launched TUG, which is a open claw agent.
We said, well, hey, why don't we just tell it to give us an update every Monday on how much utilization it's had for the week? Kind of like magic, it posted that first post on that next Monday after we gave it the instructions. I think a lot of the recent movement in the interest rate is tied either directly or indirectly to the conflict in Iran, the Trump administration.
The balance sheet decision or push from Trump to go buy $200 billion of mortgage-backed securities. Episode 83 of the award-winning Market Moves with Mark and Jeff, two uninteresting guys talking about interesting times. Jeff, letting the light of the future pull us forward here. Here we are jumping into AI. We've done a lot of talking here, but over the last couple of months, you and I have been hard at work. We had access to a lot of folks that could help us, but chose not to do it. But decided to kind of dive in deep to this artificial intelligence agentic craze and see what we could put together here. How excited are you about it right now? How's life going generally?
Well, very excited about it, in spite of the humbling effect that it's had on me. Mark, you and I have done some ridiculous things in trying to make this happen, including sharing a screen and copying and pasting text back and forth, trying to work through what is not a very easy, setup or arrangement. I think, really to me kind of speaks to early days of what this agentic approach is, in AI and setting up an agent that can actually go in and do things on your behalf. I mentioned this to you in an offline conversation, but it reminds me a little bit of like early crypto days where, you could buy Bitcoin, but to do it, you had to jump through a whole bunch of hoops and had to have a certain level of either help or technical guidance that just not the common person, was accustomed to having. And so, without AI chatbots helping guide us through, here's what to do, read this, copy this, paste this. It just, we never, I don't feel like I ever would have been able to, figure it out on my own. But, with the state of AI the way that it is, it's opening doors, for us and for others too, to be able to start to implement some of these things. But it's been humbling for sure, to say the least on my part.
Well, Jeff, let's first kind of introduce what we've done here, and we can talk a little bit about why we've done it and how we've done it. Generally, hoping that the listeners here share an interest in. You wouldn't be listening probably if you don't have an interest in this, because we talk about it quite a bit. But just trying to understand what this artificial intelligence movement is. Trying to understand whether it's going to gobble us up or not, or it just puts our abilities on steroids and all of that sort of stuff. So you and I set out several months ago saying, hey, we really ought to just dive in. We need help growing the podcast in its reach. And I think a lot of areas around that. And there's all sorts of initiatives underneath that bullet point, but helping the podcast grow. And also kind of playing with some of this agentic capability out there without impacting our business, especially with you and I's naivety, where we could just kind of silo off an effort that allows us to kind of play, make mistakes, go as slow as we need to catch up on a few things. But in doing that, we've launched TUG, which is a open claw agent, and it will do a number of things, but one of the fun things that we thought it could do was have a social media presence, both on LinkedIn, as long as their terms of service continue to allow this. I think we're borderline here. We're very upfront that it is a bot, and I think that's the utility and the usefulness of the LinkedIn account. LinkedIn's terms of use are kind of, I don't know, they don't like bots generally, understandably, but I think we're covered there. And also have created a X account, the former Twitter, which these are TUG_market moves on Twitter and TUG market moves bot on LinkedIn. And the social media presence that this open claw agent has will use the personality and the set of initiatives that we've given it to kind of detail its track in helping us and putting things together here, and in kind of an ongoing display of the work we're doing with OpenClaw, Jeff. So that's a long-winded explanation to what it is. Can you fill in the gaps for everybody?
Well, Mark, I'll tell you, my wife looked at me a little sideways when I told her that you and I were co-parenting an AI bot that we had spun up. And man, the process is really fascinating with the way that this works, because just as you were speaking to, part of the way that you create, at least in the OpenClaw environment, an agent like this is you give it a set of skills, that it's able to do. And as examples, we gave it the ability to access YouTube, to create transcripts, basically voice to text, and then, be able to address things like that. We gave it skills to post on these social media platforms that you outlined. But one of the other things that was really interesting and a little odd in some ways, but you also give it a soul. I mean, like there's a file that you give it that outlines, certain, for lack of a better expression, personality traits or things that it is to do and things it is not to do. Just a simple example, we're okay with it roasting or making fun of us in kind of playful and fun ways. We've told it, don't pick on guests that we have and show up. So if it breaks its own soul directions or something, we'll chastise it and get after it and whatever. But it's been a lot of fun to think about what can this thing do. But it's been very insightful to learn what does it take and what directions do you give it. How, of course, security is a factor. So we've, like you said, we siloed it and tried to do this in a way that's responsible. A lot of people are using it as a personal agent, and that requires giving access to all of your personal accounts, your personal email accounts and social media accounts and all that sort of thing. And as you set up, Mark, I mean, this is its own independent kind of autonomous entity. And so it has its own accounts, able to tag us, but post in its own name and that sort of thing, rather than a bot that's pretending to be us that really isn't.
Yeah, I think there's some nuance to how we've set this up, and I hope that others will find it exciting. It is nothing deceitful at the heart in any way. I mean, it's all just very transparent, and I hope that will be useful to listeners and folks that choose to follow and even engage with Tug through X and LinkedIn. I'd love to see people doing that and ask it questions how it's serving us. And it started a few weeks ago, posting daily real estate topics, just different trends and things that it's seeing out there, which is a lot of fun to look at. I'm anxious every day to see what it writes. I'm anxious to engage with the agent and just kind of have conversations or ask it to do a little more research. And these things are just really good. It within the soul, the character of this OpenClaw agent. It is essentially a podcast colleague for Jeff, Maggie, and I, as we're working through all of this. And we did ask him to introduce himself, which Jeff has on the screen for the video listeners here, but I will quote Tug, who we asked for a quote for this. And the quote goes, "I'm Tug, short for Two Uninteresting Guys, which is either a great name for an AI or a really sad confession. I analyze mortgage markets, track housing data, write social content, and occasionally remind Mark and Jeff that their own tagline implies they need me. You're welcome, gentlemen." And there's just a lot of good. It's very aware that us as appraisers are self-conscious about an AI like Tug replacing us. So there's some fun to be had, or some entertainment, I guess, to make the engagement interesting while we're going through really useful things, Jeff. And I'm anxious to dive into a little bit of the how that we've set this up, hoping that folks would find a little bit of that interesting. If you are, we've talked about this ongoing for months and months and months on the podcast. Like I'm just trying to understand what the hell artificial intelligence is, these language models are, what are they really doing? What can they do? What can't they do? And in diving in deep like this, there's just no other way to develop an understanding of how this is working and where its utility can be applied in a number of different places. And so, I mean, we have been, in confession, we found a 2014 Mac Mini lying in one of Jeff's family members' homes. We have confiscated it and taken it on. That's housing this OpenClaw agent. That is a very old machine that hardly works on its own, much less putting AI onto it. But we'll run into account sign up issues and all sorts of things that no sane technologists would run into. But we're just sort of suffering through that in private here, so that we make sure we learn all the ins and outs of this. And it's been a really fun, enlightening process.
Boy, it really has. And it blows my mind what can be done even on a very antiquated piece of hardware. It, in and of itself, running this thing isn't, super compute heavy. It works. It can be done on a 12-year-old, piece of hardware that's sat around forever and not been used in a long time. Of course, newer hardware is always, better when it comes to, running things like that. But it's just been fascinating to see that, it doesn't, this application is not requiring the latest and greatest. In fact, is probably the opposite end of that spectrum as far as, computer hardware and capabilities go. And there've just been a lot of things that we've learned and figured out along the way, and still a lot of things we're working through in the moment that, either don't work at all, things that are on the list we'd like to do, or things that it's doing but not great. LinkedIn posts, for example, it's doing them, but the way it's tagging us is not the way that I envision it being. Like, there's a lot of tweaks to learn along the way. But, Mark, one of the interesting realizations that came for us is early on, we thought, well, this is certainly a labor of love. We don't have any real meaningful budget behind it. We would just want to be careful that we're not, using too much token spend or compute capacity. And so we said, well, hey, why don't we just tell it to give us an update every Monday on how much utilization it's had for the week, so we can at least try to monitor the expense. And so, kind of like magic, it posted that first post on that next Monday after we gave it the instructions. And, it just led us to thinking, well, crap, that's awesome. What else could we schedule it to do that we want it doing as it relates to the podcast itself? And so it's just these little moments of insight that then kind of get the creative sparks, going of, well, that's pretty cool. It can do that. What else can it do, and what can it lead to? But that I feel like that kind of encapsulates this entire spin up process. We've just had to diligently be at it, spending time every day working towards, how do you create it? How do you spin it up? What hardware works? Getting a lot of questions answered by asking, AI LLM models. I've found, and you'd probably endorse this as well, that that Claude AI, which is separate and distinct from OpenClaw, names are similar, so it's easy to kind of confuse those two. I certainly have early on. But Claude, with its chatbot, is really good at guiding you through a lot of the questions and things that come up. One of the other learnings has been that one of the really natural use cases for large language models is computer language, computer code, and helping guide, total novices like you and me through setting up and making changes and fixing things when they break. I've seen things that I didn't know what to do, but you just copy and paste into Claude chatbot, and it's really, really good at diagnosing and telling you what to do, and even giving you the code to use to fix things. So there've been a lot of learnings like that along the way, Mark, but it's been fun to see what can be done with a little bit of dedication and a lot of help from AI.
Jeff, that's I think a challenge for us going forward here on how we engage with the market moves audience in what we're doing. Any feedback on interest on this type of stuff would be helpful, because we definitely will be communicating through Tug on LinkedIn and Twitter and what it's doing for and with us. But how deep do we go into what we're doing here, and kind of gauging the level of interest in that will be something we'll be watching closely. We don't want to get too deep. If its eyes glaze over, I've got no interest in this at all. But part of why we are wanting to dive into this is the spirit of market moves, which is just curiosity, letting the kind of the light of the future, the potential optimism of what's coming, enter in our laboratory and say, hey, what can this mean? Let's understand it and not just fear it. So we're doing that. And I think by going through it, we're hoping that several of you listeners will kind of be interested to do something. Maybe you haven't jumped into it just yet. We're a long ways away. Maybe won't for a while, but maybe not only providing a example of what it might be able to do for you, but also how you might be able to jump into it if you wanted to do it. And Jeff, you hit on Claude, which is Anthropic's LLM. There's ChatGPT, which everybody knows. There's Grok, which I use quite a bit. which is X or Twitter's LLM. And then the one that's gotten all the rage over the last 3 or 4 weeks and longer, but really gone nuts is Claude, which is Anthropic's LLM. And their ability to code has been what I think is really blowing people away. And so to do this, the starting place was literally just going into Claude and saying, this is what I want to do. Strategize a way forward for me. And from there, literally, it walks through everything. Well, why do you want to use this? What do you want to do with it? What kind of tools do you have accessible? We started on the track of a free virtual machine first with Oracle, but we waited for 2 weeks for some space on the server to become available, and it never did. So we resorted to this Mac Mini being stolen out of Jeff's family's house to get up there. But Claude is walking us through all of that, and the first 3 or 4 weeks of this was just, hey, here's what we see, paste it into Claude. What do we do next? And then it gives examples. And so it is for the dumbest non-technologist out there. It can walk you through all of it, and you learn where that thing sends you in circles. Claude sends you in circles and all that. But that's really it. Claude taught us how to install OpenClaw, and then OpenClaw was able to kind of take the reins at some point and be able to talk to us about the further setup. So that's really it. It started there, and do I think anybody could do it? Just about, as long as you're willing to. How much pain and slowness are you willing to tolerate because you don't know some of the things that it's challenging you to complete?
For sure. It has helped on my end to have a bit of a collaborator. I don't know if it was you guiding me along, Mark, or you just looking as stupid as I felt, so that it gave me the encouragement that it was okay that we didn't know what we were doing. But, it's been a lot of fun. But I think, like building most things, I mean, certainly there have been setbacks and challenges. There have been, it's really fun when you get over a hurdle and something works well. And I hear, like those that are in the coding space in particular talk about like the euphoria of having something, that's been a problem that's finally fixed and working the way that you want it to. And, we've definitely experienced a little bit of that. On the point that you made, anybody who, happens to, endure listening to us and be a fan of this podcast, we'd love for you to follow Tug on whatever your preferred platform, X or LinkedIn. I just reposted something that he posted today for us about interest rates. One of the weekly posts is an update on rates, and I'll look back, what were they like a year ago or something, and then giving context for why they are where they are today. And in that part of that message I reposted is, a lot of what I see, and I'm guilty of this too, is, hey, look at me, I'm going to this conference, and there's not a lot of interesting insight to me that I see on LinkedIn. But the stuff that I think Tug is going to be able to bring and talk about is going to be interesting. I think it's going to be insightful. It's going to be referencing, relevant data sources and stuff. And we can interact with it. We'd love to have people jump on there and ask it a question or respond to it and see what the response and the analysis is. So it's certainly a work in progress. I mean, I don't think either one of us are saying this is a totally finished project by any means, but it's, the engagement, I think, really helps drive, what it helps any user understand what can be done. And it certainly helps us understand what's on people's minds and what people care about as we continue to adapt the podcast going forward. But boy, it's certainly a display of what an agent can do, in this narrow podcast setting, but it certainly opens our minds to, boy, that's awesome. What business applications does it have? And that's a natural, kind of next step that we're contemplating, but nothing to reveal in the moment on that front.
So, Jeff, I wanted to talk for a second here about one of the epiphanies that I had. If any of you have, even the first time you get into a large language model and you ask it to, calculate a 12C sort of thing, and it does quickly, or who knows, right? We all have those moments of saying, "Oh my gosh, this is pretty powerful one way or another." But for me, we were speaking with Sandy Adamatis at a conference in San Antonio, the ResNet conference, really, really interesting conference that we'll have to talk about more at some point. But I was driving home. It's about a 3-ish hour drive home from the conference. We communicate with Tug via Telegram, which is like a messaging app that we set up. So this is how we set up communicating with Tug. And It's like, okay, I'm ready for the next thing that we're going to do with this. And so I am just talking into my phone on the drive home. And on that drive home, what I set up was, we have this podcast, Tug, addressing Tug. It's on YouTube. I would like to be able for you to clip things from that podcast and make that part of your repertoire of postings weekly, right? So clips from the podcast talking about them. So in really setting almost all of this up vocally, there was some work to do behind the scenes for sure. It wasn't quite that simple, but all the strategy planning and the execution steps, all right there. But what it is doing for us is it is identifying when a new podcast is released on YouTube. It is downloading it. It is spending 15 or 20 minutes transcribing the podcast word for word, all 20,000 words or however many are in the podcast. It is then identifying interesting segments through the transcription. And then it's going back to the video and it's making the clips of the interesting segments and posting them on these accounts. Tug may comment on this, right? As it's reading the transcripts from this podcast here this week, as it's going through it, and can comment back to me through this analysis here. But there's reasoning and logic. There are skills and capabilities. And all of this, it takes a little bit to get it up and running, but it's just not that hard to do, And Jeff, you and I have had an idea of inviting Tug in a phone call to this podcast, right? To be able to talk here. We talked to Tug about it. Yeah, we could absolutely do it. It's just whether or not we want to go through installing the skills and setting all that up, which we probably will at some point. And so just sort of the sky's the limit, Jeff, that's a pretty intense closed loop process that the agent is able to go through and complete for us entirely. I hope that everybody's able to follow what we've been talking about for the last 20 minutes, Jeff. It really is exciting. As you said, encourage you, it would help us if you could follow along on X if you're there, LinkedIn if you're there. I'm sure most of you are on LinkedIn, and it's Tug Market Moves Bot. Jeff has forwarded. I have two, but a lot of stuff will be going on there. So if this happens to be over your head on any level, sorry for that. That would be Jeff and I's fault. I think a slow understanding and observation of what it is there. And, I think one of the reasons we did this, Jeff, is because, some of our most watched podcast episodes are Jim Amron, who we had on twice, talking specifically about artificial intelligence, and Roy Meyer, who has spent a lot of time, in fact, has a whole series of OpenClaw agents himself and has been talking about that. We want to have Roy back on here soon and to be talking about that, but we wanted to get some experience under our belt here before accomplishing that. So we hope there's an interest. I suspect there is, but this is kind of a unique way of going about it, Jeff.
It is. Yeah, it definitely is. And it definitely leads to, man, what else could be done? Could I have an agent call and schedule appraisal inspections for me? Could I have it do, just on and on and on beyond that? And I think that's really where Roy's focus has been, is how can I take this AI agent application and put it to productive business use, which is really what AI's promise is. And if it's going to be valuable, it's that it's going to actually do things that are, commercially valuable, for individuals, for businesses, and that sort of thing. And so it's been really insightful. It's been a lot of fun, certainly been a lot of frustrations along the way. I've been having a back problem, and I think that I've realized, based on trying to diagnose it with an AI agent, that if you're seated and turned the same direction for extended periods of time, that can throw out like muscles and stuff in your back. And as I look back and thought about this, the Mac Mini and the camera and the monitor sits off to the left. And so I just naturally, not even thinking about it, been twisted to my left, typing and fixing and diagnosing and playing with Tug. And I mean, I'm sure it's not equivalent to labor pains, Mark, but this thing is leaving a mark on me that I'm like doing yoga stretches every morning now, trying to like recover from. And so it's been some emotional pain. It's been a little bit of physical pain in spawning this thing up, but incredibly insightful. I mean, definitely worth the time and effort that we've put into it, and fun to see where it goes next. Like you said, I think we will give it skills and ability to actually join the podcast from time to time. Would be a lot of fun to see how that works. So there's still some unknowns in making that happen, but I think a very doable venture, and more to come for sure. But been fun to test, been very insightful, and I think learning as we go, as always.
Jeff, I am imagining you telling your grandkids 20 years from now why you have the cane. It's an old artificial intelligence injury, and I'm sure that will 20 years from now will just be an obvious. We've got the cell phone neck now where you're looking down at the phone. This is just the next thing.
A sign of the times, no doubt.
Yeah. Okay, good stuff. Well, follow along if you can. We'd love for it. If you have an interest in this, please do let us know. That will help us decide how much we talk about on the podcast here with this. Interesting times indeed. Jeff, we can jump to some real estate topics, which is what a lot of people come to the podcast for. There's a lot going on. I've been busy. You've been busy. And I had not looked at rates for a week or so, whatever reason. February 26th, interest rates were at 5.99% or 6%. On March 26th, they were at 6.65%. That is atrocious. And in the name of we can't have nice things, we had a nice little run for a moment. We are on track for this great booming economy, and bombs start dropping in Iran. And here we are. So I don't know what else to say about it, Jeff. The bombs in Iran are bombs in the housing market here in the U.S. I think things have really come to a standstill. I have seen a ton of headlines talking about, this is always the headline, but it's like even more so that there are far more sellers in the market than there are buyers all over the country. It's an interesting phenomenon where sellers kind of generally aren't willing to come off price, even though there's a lot more of them out there. It's just a weird dynamic.
Yeah, I think that sums up the market very nicely and succinctly. Overall, Mark, it is for sure. One of the things that appraisers are worried about is being replaced by AI. I think a lot of white collar workers, have that concern. Frankly, podcast hosts might have that concern in time. One of the things that we do have Tug set to do, and I think is relevant to this interest rate discussion, is a Monday morning post about interest rates, looking at what are they today, what were they a year ago, what explains where they're at currently. I'll just briefly show Tug's post today about that and highlighting the reality that 6.65% that you just referenced. And I think that the war is really the issue, and not just the war, but the side effects that come out of that. Oil has spiked significantly. The Fed is worried about what high energy prices are going to do to inflation, which hasn't come down to where the levels that they want it to be. There's just a lot of this stuff that's interconnected. And so I don't think interest rates automatically have gone up simply because of a conflict in Iran, but it's the corresponding energy effects and inflation concerns that lead investors to say, well, crap, it doesn't sound like the Fed's talking about cutting rates at all now, where just 30 or 45 days ago, it was kind of a foregone conclusion. There were going to be a couple of cuts. And so these things are definitely connected. But we look up today and see interest rates, over 0.5% higher than what they were just a month ago. And a lot of this has happened very quickly. Just another reason to kind of follow along with Tug's analysis on a weekly basis, pointing to what's going on. But, as we look at it today, I think a lot of the recent movement in the interest rate is tied either directly or indirectly to the conflict in Iran. The Trump administration is signaling that they want a quick off-ramp to this. I think it's politically going to be a problem for them if they don't find one. So whether they can or not, I don't know. I'm also seeing articles even as early as this morning about a troop buildup there, and Trump making comments about taking oil and stuff. So, there's a desire to end it quickly. Whether that actually turns out to be the way it happens or not, I don't know. But I think that interest rates and the concerns here are going to continue to be tied, very directly to what happens there one way or the other.
Yeah, it's just so much uncertainty. I'm why I'm reading presidential tweets about the status of the war in Iran to understand how active my business is going to be in residential real estate here in the U.S. is just wild, and it's every day, and it does really coincide. It's crazy. I think we can be back on track very quickly if things stabilize, but this is that uncertainty we've been talking about for 2 expletive years, and I don't know. So there we are, right? It's just the new uncertainty that was somewhat not predictable. we're slowly plodding towards June, Jeff, which is, the first Federal Reserve meeting with the potential of a new chair in place who has talked about material drops in interest rates. What inflation in oil and energy prices skyrocketing does to that, boy, it throws a real wrench in it. I thought that was becoming a real certainty. And I mean, I think we're probably heading there still, but I certainly don't have near the certainty. It's I don't know what the 2023 was survived till 2025, right? And when that was set, I remember, oh, come on, that would be awful if that was the case. Here we are, 2026. I can't even come up with the rhyme for 2027. But are we there, right? I don't know. And by that time, as appraisers, has Trump urged with these executive orders the powers to be to come up with alternatives to what we do in valuing properties.
Send me to heaven before 2027, Mark. Maybe that's what that's what I'm going to hope for, is just a release from the pain and suffering that has been this market. Also, I can just imagine in my head this conversation between Trump and Kevin Warsh, saying, yeah, I think we need to cut rates. And then he gets put in, and then Trump's saying, well, why aren't you cutting rates? Well, dude, you didn't tell me you were going to start a war and like double the oil prices in between, nominating me and me actually getting put into the Fed chair position to be able to do something or make interest rate decisions. So, I mean, for a lot of reasons, and probably the most significant of which, just the human toll and loss and suffering, I hope that there is a quick off ramp there. From what I'm seeing, I'm a little less certain that there is going to be a quick resolution there than what it seemed like maybe there could be. I hope that there can be, but there's a lot of reasons that it's problematic, with what's going on over there. So I hope it can change, but we'll continue to monitor it and see what the impacts are too.
Well, Jeff, I think talking about rates and activity and even the CEOs, there's a focus maybe necessary on Fannie Mae, Freddie Mac in movements they've got here one way or another. Notable first that the whole stock market is taking a dive, but you and I, in fact, we asked Scott DiBiasio at the end of the last podcast about this whole idea of exiting conservatorship, which really looked like it was gaining a ton of steam. And then we had the balance sheet decision or push from Trump to go buy $200 billion of mortgage-backed securities. I don't think that strengthens the balance sheet of Fannie Freddie, but I just wonder what all of this means towards exiting the conservatorship. And it feels like the stock market is agreeing, right? We were up to $11, $10 a share, I think, and we're down below $5 right now. Notable also, Jeff, that we will go back to this, and I want to talk about the losses and the wins. Open door in the moment is like 460 or something. It's getting hammered. Got up to 560, maybe getting hammered right now. But yeah, Fannie is under 5 when we had all this momentum moving forward.
Yeah, that's been interesting. In fact, you'd asked the question, and I knew it was down, but I didn't even realize it was down as much as it is. So, maybe the narrative of that being a winning trade, from the podcast is not holding true. To me, it really does seem to be, and maybe I'm misreading this, but I think it's a bit of a gauge as to the likelihood and the timing of Fannie and Freddie exiting conservatorship. And to Scott DiBiasio's point, from the last podcast, we're not hearing anything about talk about that, where it was a pretty heavily covered, or it was just talked about a lot, from the FHFA director to President Trump himself. And I think there are just focuses on other things. I think they're worried more about trying to address credit availability, housing affordability, and those sorts of things. And I commented on this on a recent podcast. I think they're realizing that having the GSEs in conservatorship makes that easier to do than if they release them from conservatorship and they're more autonomous to do what they want, without the FHFA oversight and direction. So that's my take as to why the stock market or the stock prices come back down for those guys. And we'll have to see if there's a renewed push to get them to exit or not. But I'm wondering if that may not be as high of a priority now.
I think there is political motivation to kind of quote unquote fix the housing market. And that essentially means market manipulation. And I think it's much easier to manipulate the housing market with a tool like the GSEs in conservatorship, and so I think that explains it a little bit here. And yeah, I mean, maybe there's a bombshell yeah, we're doing this, it's happening, but it sure doesn't feel like it to me this year. And in my defense, at least, I will explain, even in our predictions to start the year, I thought that Fannie would not be up at all. And I don't remember if I said down or not, but definitely not up, and thought that, the conversation had just stalled in a way that the market wasn't acknowledging yet. And so, I was kind of looking at it like, hey, it ran up, good time to get out and see where this thing goes, is kind of how I've been feeling about it all along. So I'll say the market moves trade is still intact, at least from my perspective a little bit, Jeff. I don't think it's a bad time to get back into it here with the market down. It's a good time to get back into the market generally, although it might not be a bottom. Not financial advice, but just kind of watching the trending here. And maybe it's just someone wishful thinking and hoping that we get a resolution to the Iran deal. And so we'll see there. If you've got anything there, I was going to take us to Fannie allowing crypto reserves as collateral too. So that's the second topic as it relates to Fannie. Any comments further on the GSEs here?
Yeah, no, we're definitely on the same page with the topic there. And that is the interesting side note. And I don't know if this is a factor of, or a function of like the cooling of the discussion around them exiting conservatorship, but a really interesting article that I saw that is talking about them allowing crypto reserves as collateral towards a purchase, for a Fannie-backed mortgage or purchased mortgage. And in a nutshell, the way this works is you buy, or you take out the first mortgage in the way that you normally would. This crypto-backed collateral is for a second mortgage that is taken out, both held by the same mortgage company. If the name of that company comes to me, I will tell you what it is. But so it's something that they're testing with a couple of lenders in the moment. But just interesting that they're allowing a way to use assets to be held as collateral. And so but what happens is that, so say you have $100,000 in Bitcoin or something, it gets shuffled to a custodian account that holds that as collateral. You don't lose it, but you're also not able to trade it or do anything with it until that second mortgage is either paid off or refinanced or whatever. So I don't know how much it's going to move the needle generally, but it was an interesting, kind of minor innovation in this effort of trying to help people get into homes and into mortgages that may have some sort of digital assets that are valuable, but not wanting or willing to liquidate those for the sake of buying a home. This program at least allows you to keep the amount of the cryptocurrency that you have and use it to help fund, at least backstop the mortgage that you're applying for.
Yeah, Jeff, I don't know. To me, I think this allows Satoshi and Michael Saylor of MicroStrategy to buy more real estate. But how many people have a lot of crypto out there? This doesn't feel like it reaches Main Street at all to me. Just more to do, more work to do, and anxious for a revival here. And I think we get it with some lower rates and certainty, and that's it. It doesn't take any more than that, and everybody can't get out of their own way to make that happen.
Yeah, I think that's exactly right.
Well, talking about whatever market this is and the need for reviving it, we got another data point, which I hadn't really thought much about, but it's this concept of renter lock-in effect, Jeff. Tell us what you know about that.
Yeah, you bet. So NAR put out just recently, in the last couple of days, a chart and some stats that were just kind of interesting. We've definitely talked a lot about the lock-in effect for homeowners and would-be homeowners. And so the corollary to that is the lock-in effect of renters. If you're viewing this on YouTube or on the screen, the data that they have shows in 2025, the average time of a renter was about 5.5 years as a renter before moving up into buying whatever the entry-level house looked like. That's been steadily climbing from 2005 until 2024. They're showing that increase of 6.5 years. The chart is definitely up and to the right. The actual overall effect is about a year longer that people are sitting as renters on average. But the thing that's maybe more interesting or insightful is how that breaks out across the country, because that trend does not hold true in California the same way that it does in Florida or the Midwestern states. It obviously affordability is the main factor there. On the coast, in your highest value areas of California and up the eastern seaboard, especially in the Northeast, the average time of a renter is closer to 10 years on that front. And so, just interesting and not surprising, but, kind of connecting some dots that some are locked into their homes by virtue of, ultra low interest mortgage rates. Some are locked out of housing generally, for the same reason. Rates have gone up and pricing is so high that it's just unaffordable. Rents have continued to increase over that same amount of time, Mark. And so it's, affordability is the challenge. And I think that's why we see it showing up in so much of the political focus, that we'd alluded to previously, is it is the biggest pain point that people are feeling in the moment. And I think the reason that they're trying to do something, even if this crypto-backed, mortgage security thing doesn't move the needle for a lot of people, I think they're grasping at whatever the straws they feel like are available to them, because, people are feeling this pain more acutely than about anything else.
It is, just such a drastic 180 from the mobility of the American, of family having age, and people just kind of sitting tight for a long period of time here. This is that, odd psychological experiment that Fed monetary policy has kind of thrust upon us over the last 2 decades. And I don't know. You would think there is a ton of pent up demand. I think it has to be creating new habits or levels of comfort. When I'm out there seeing my peers moving around and doing all these things, I kind of want to do the same thing, right? I just fall into the momentum of that. When nobody's doing any of that, I've developed a level of contentment at my home that I've now been in for 10 years. Didn't really have a plan to be here this long, but I'm not sure I'm going anywhere. And may fight the urge to do it. And that's not even unhealthy necessarily, but how many Americans out there are thinking this same kind of thing? Certainly they're saying, is homeownership worth it? It's harder to get in if you don't own a home and haven't during the COVID run up. So, we're just in a weird place. And I think it's, you can predict, but to predict with accuracy is going to be difficult, because it's an experiment. This is not a set of circumstances that have been thrust upon a people in any way that I understand.
I think it's exactly right. And markets are dynamic. We continue to try to watch and follow and understand and anticipate what they're coming. But I totally agree. It's so hard to predict what's coming. We try to stay up and anticipate what those, these converging currents in the economy, what they lead to and what they might mean. But, they're just unknowns and unknowables that make it really hard to predict with accuracy what to expect coming. But we're definitely seeing things we haven't seen either before or in a really long time. And it feels like something's going to have to give on the affordability front. I mean, in time, markets tend to, resolve themselves, but the housing market doesn't seem to move particularly quickly when it comes to that part. But to the extent that it's unaffordable for many people, something's going to have to give, and we'll continue to monitor to see what it is that's adjusting to that over time.
Well, Jeff, as we're recording this podcast on a Monday morning, Tug is responding. So it posted this morning about interest rates, as you had said, using Freddie Mac as the data source. Interest rates were 6.38 or something like that. I use Mortgage News Daily. That's got us at 6.65, something like that. And I was asking Tug what the differences are in these sources, and so Tug has responded with a pretty thoughtful response here. And I don't know. It's an interesting account in both instances on Twitter and LinkedIn, or X and LinkedIn, and it's working while we're not. And it just takes a second, like Jeff said, run me a Monday report of blank, and it's just done. It puts it all together, and you iterate quickly. So really, really excited about it. Excited to share with you the journey and have you follow along. We will have in the show notes the links to each of the agent social media accounts. And Jeff, there's so much going on, family life too. We haven't had time to get into today, but we're after spring break, towards the end of the spring semester, and I've got a lot of family events, kind of major milestones happening over here.
If anybody cared, I think we could fill up an entire episode with all of the crazy stuff that we have going on, family and otherwise. But future episode maybe.
I've specifically gotten feedback that people don't care, Jeff. So what are you gonna do?
And for the record, that wasn't just from me.
Yeah. All right. Well, Jeff, that'll do it for episode 84. Enjoyed it. It felt like it had been a long time since we recorded. Tug, happy listening to the podcast here, and look forward to working with you.
Yeah, make this interesting, Tug. That's your mandate.
There you go. All right. Till next time, Jeff.
Thanks, Mark.